Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have CEO John McKimm and COO Mohamad Chayah from Smart Employee Benefits. Smart Employee Benefits trades on the TSX Venture Exchange under the symbol SEB and on the OTC under SEBFF. The company is currently trading at 20 cents with roughly 171 million shares outstanding, or about a $34 million market cap. I'd now like to hand it over to Paul Andriola.
Thank you, Trevor. Great to have both John and Mohamad back with us. I think we last spoke probably about a year ago, and clearly last year has been very busy for you guys. So lots to update everybody on. But before we get into the update, maybe John and Mohamad, if you can just remind everybody what Smart Employee Benefits does as a business.
Okay, thank you, Paul, and thank everyone for joining the call. We're an end-to-end IT and benefit processing software solutions and services provider, and our core market is targeting the insurance and the group benefits marketplace and government. And our whole business model is driven around aggregating the distribution channels so that we can control the distribution of insurance products and other benefit solutions into those marketplaces.
Fantastic. Now, you guys, clearly you've had a very busy year last year. I've seen certainly in the press releases that you've put out, you've landed a lot of contracts, your backlog, your business has grown. Why don't we talk to that? Let's talk about some of the updates and some of the things that have happened over the course of the last year.
Okay, well, in the last roughly 15 months, we've won over 183 million of new contract value business. In that group, there's some very signature clients in our software side as well, like RCMP, City of Ottawa, Honda, all competitive situations, and some big ones. We've renewed all of our clients. We haven't lost a client since 2019. So we've grown our business very, very well. Today, we have over 450 million of contracts, some of them out as long as 9 years. The majority of that contracts are in the 3 to 5 year basis, comes out at then. Over about 140 million of those contracts are in the software and the solutions side, which is the high margin part of our business. The gross margins on that side are over 70%. And you've got about a little less than 300 million that's in the services side. Our gross margins there are between 15 and 20. In all of our consolidated gross margins in 2021 moved up over 36%. And that is up from around 17% in 2017. So we've the increase in sales in the software solutions part of our business, and they go hand in hand. For most of our clients where we deploy software and solutions, we also have a services dimension. So the margins are a little bit different. But as we move forward, our software services, our solutions side is growing faster than our services side. So we would expect our gross margins over the next couple of years to move in excess of 40% consolidated. And that speaks well for our bottom line.
Perfect. So you clearly you've won a lot of contracts over the last little while, but what sort of does the pipeline look like? I mean, is it over, or there's more to come?
If we look at our services pipeline, that's a very large base of business. Right now, the RFPs and stuff that are that we have applied for or are in the process of responding to are several $100 million. So our win rate on that side of the business was also over 65%. So we've had some pretty good success in increasing our win rate, which has gone, I think in 2018, it was around a little over 20%. So we've pretty much tripled that. On our software and solutions side, let's call it the benefit processing solutions and software, that pipeline is also several $100 million of revenue, gross revenue. And we talk about these things, winning contracts, like we put a 5-year dimension on them. So it's pretty large. On that side of the business, we have over 2 million plan members, which is about $6 billion of premium that is in that pipeline. And we're very, very close. We're actually launching about $2 billion of that. So we're making very good progress. We would expect that we would have under contract by the end of this year somewhere over $3 billion on our white label platform by the end of this year. And that's a big number. So just to do the math on the administration, just the administration services alone on that, you would have a revenue of between 1.5% and 3.5%. So, you're talking tens of millions of dollars worth of revenue when you have, this size of contracts deployed in our back office environment.
Mm-hmm. Now, okay, so 65% win rate. I mean, that's pretty, pretty impressive. But why? Like, why are you guys winning as much as you are?
Well, several reasons. One is our solutions, and it's not the most important, but one of them is our solutions are very cost effective, very scalable. Going forward, for example, over 80% of all new gross margin goes to our bottom line now. So our solutions are very scalable. The other thing is that they're leading edge. Most everything we have is cloud. It's all managed services. It's very, it's not only very cost effective, but it's easy to, or not easy, but it's more easily deployed, more easily managed. It has, we're ISO 27001 certified now. We got that this year. We're the only company in this particular space, TPA, third-party administrator, that has that. And the other thing is that we have a lot of experience with RFPs, requests for proposals, and with bids. We're multilingual across the country. We can service clients across the country. We have a lot of references. If you take a look at our clients, which are, if you take clients like the RCMP, various parts of the federal government, the security clearances that we have, if you look at our corporate enterprise clients, it's a who's who in Canada. So if you pick a name out of the air, there's probably a 1 in 3 chance that it is our client. So we've got great references, long-term contract references. The security is impeccable. The certifications of our platform that others don't have. Everything's multilingual, and a lot of experience in responding.
So clearly, call it price is a factor in sort of winning these contracts, but it's sort of the value for what you're delivering is the driver here.
Well, price is always a factor in pretty much everything you do today, but it's not always the primary factor. Okay, there's the references, your client references. Okay, there's your service level agreements. There's security is a huge issue today. And our ISO certification is not only about our technology, it's also about all the business processes around that technology. So very important of those. So and the ability to respond, that comes with experience. So we're very well positioned. We've worked hard to get here, and I think we're very well regarded by our clients.
Now clearly there's, you guys are going to be growing significantly. What sort of resources do you need to be able to sort of deliver on these contracts?
Well, there's financial resources and people resources.
Mm-hmm.
Given the nature of our business, we're very scalable. On all of our software and solutions side, it's a very scalable business. So we don't have to add a lot of people necessarily to support and manage new contracts on that side of the business, given that everything is cloud and supported. On our services side, that's largely a contract-driven business. As we don't have anybody on the bench, so our risks are very, very low. And we've got a very strong reputation in the industry. And we have a very large database of experienced and skilled resources. And we've got certifications across 30 plus different platforms. We're able to access people quite effectively.
Perfect. Now, a lot of what we talked about is sort of what's happened. Now let's sort of look ahead a little bit and talk about some of the new initiatives, new projects or new technology. I know, Mohamad, we were going to speak to that a little bit, but why don't we talk about some of the new things you guys are working on?
Yeah, Mohamad, why don't you address some of those questions, please?
Absolutely. Thanks, Paul. Thanks for having me. So there's a lot going on, and it's very exciting time for us with the technology innovation and the advancement that we're seeing around the metaverse and other aspects of the blockchain and the overall the technology trends. We keep innovating and introducing more and more. We're focusing now on hyper automation across the product line and service line. In the near future, we're converting a lot of our applications into composable applications, making them more and more modular, efficient, and adaptable. We're packaging a lot of the new capabilities and feature sets and implementing more decision support capabilities, moving from standard decision support into decision augmentation, potentially decision automation, and helping both the member, any type of user on our platform, making those decisions right there and then, and enabling them, empowering them with all the resources and tools to navigate through the platform. We're also looking into enhancing the total experience across the product line and the modules that we offer. Other part is really our data fabric, and everyone is talking about data and the use of data and how you can monetize that data and generate incremental revenue and value and extract more dollar and growth, whether upselling, cross-selling, and other models. So optimizing the connectivity and bridging the gap between conceptual models and business models by adding more API capability with channel partners and vendors and suppliers and making those available on our platform, not only will help us upsell, cross-sell, and enhance the product capability, but also it will unlock new opportunities for our channel partners to generate and convert some of their cost centers into profit centers. As John alluded and mentioned, the cloud native platforms that we're leveraging, but also we're looking into the architecture principles, standardizing and automating a lot of those cloud services. We have a target in the next 3 years to have zero-touch operations, whether it's delivered on a SaaS basis, like software as a service, or a co-source or fully outsourced model. Anything we touch in the back end will have zero touch from operations. It will be fully automated. So super excited about that. A lot of capabilities will be coming in the next upcoming releases. So we're very excited about that.
Mm-hmm. And what sort of challenges are you facing, if any, as far as, innovating or bringing on new services like this? How challenging is it to bring a new product like this to a client?
It is challenging, and the whole market is suffering with identifying, finding skills, and
Mm-hmm.
and implementing those The good thing about SEB, we have this progressive culture where we're able to attract talent and get them excited about the product and owning part of the product and the evolution and the advancement of the technology. So we've been very lucky and able to attract those talents, retain them, and give them that opportunity to excel and grow. We are very agile and nimble. So despite the 70 million sales and the large operations that we do, we still operate in a very flexible and nimble and fast-paced organization, which a lot of the new Generation Z likes, right? So we have all the tools for them to use to collaborate, interact, and learn and develop. So we've been doing quite well, retaining, attracting, and new talents, and implementing things much faster than others. We do it faster, we do it better, and we bring it on in a much cost-effective way.
At this point, I want to remind everybody that's listening, if you've any questions you'd like me to ask, please use the chat function, and I'll ask the question as we go here. John, I'll come back to you more as the whole business. What other challenges, if any, are you facing? I mean, clearly you guys are growing quickly. That always comes with challenges. Can you give us any ideas of other challenges you might be facing?
Well, as our business operations, as I say, the ISO certification is a big one, because that really looks at our complete operations, not just our technology. And when you get that certification, it shows our commitment to efficiency, both on a cost level and in terms of reducing errors and security and all of that. So, as I say, as Mohamad said, people is always a challenge. Like, we've had low turnover. We've got some very good people. And we have programs with universities now for work programs and stuff like that. So we're looking at deploying training right from university, some of the smartest students we can find, which, that seems to be the best way, because so we've got those programs we're launching. Our stock price is something that we've, if we look at our challenges, I guess that might be one of our challenges, is finding ways to get better valuation. We've grown our business well. We now have 6 quarters of positive EBITDA, and we'll soon have 7, and that'll be sustainable and grow from here. With the new business that we've won and some of the contracts that we have and the outlook, we expect some exponential growth in terms of our bottom line now going forward the next 2 or 3 years. So that will require some capital, some additional capital at some point. We have recently announced a $5 million convertible with Cooperators Group, our strategic partner. I don't think that was well received in the marketplace, but I think it was a bit misunderstood. First of all, it is our strategic partner. They didn't invest in us to sell their interest. They look at us as a very strategic part of their growth plan, and they can be part of our growth plan. So that's the way we're moving ahead. It's also the conversion price is above the market, and near term it doesn't penalize our cash flow, and it won't be stock that'll come back into the market. We have the opportunity to force conversion as well, as we do on their other investment. So given the nature of this market, which today is focused on oil and gas, and tech stocks kind of get lost in the middle there a little bit, as you know, Paul, sometimes, and we kind of fit in between cannabis, which sucks all the oxygen out of the market, and oil and gas, which is now sucking all the oxygen out of the market. So we need to make sure we have a good balance sheet, a good working capital position, and we can take advantage of these opportunities we have. Mm-hmm. So I would say our 2 biggest challenges is making sure we can access good people, and I think we have good programs for that, and maintain our existing people. And the other is making sure we have cost-effective capital, and manage that dilution carefully. We don't want any more dilution than we can actually absolutely have to take. But those are our looking forward. Winning business, we've got a very good track record there, and internally, I can maybe address this later, but we have a huge just organic growth opportunity in our company, just with our existing contracts.
Paul, I see a couple of questions here, if you don't mind.
Yeah, we'll jump on them in a second. I just want to follow up a little bit. So, I mean, you sort of answered some of the questions I had in terms of the financials and sort of the private placement that you announced and the resources you need for that. So, thanks for that. But a little bit on the stock side, like, I mean, you're a microcap company out there. How are you finding the reception? Is anybody paying attention, so to speak? Is it any of the sort of traditional, call it investment bankers or analysts or any of those guys, are they come down market to a company like you right now?
Well, we've got some at this stage now that we're into positive EBITDA and growing, and with the most of our capex is gone now. We're engaging active investor relations. We should announce that in the next week or so. A very well-respected firm that I'm sure a lot of your folks might know, that I think will be positive for us. We also have now a number of, let's call it the mid-tier investment bankers that we're starting to get some attraction with. People Corp sold for 1.4 billion, but 6 years ago, its market cap was 35 million, right? So I think if you look at us, that could be one parallel that you could draw. And so there is a lot of interest in companies like us. I mean, look at the size of our book, look at our clients, look at an industry that is pretty much recession proof. Like this industry grows 4 to 8% a year. Over 90% of our business is recurring. Like, what other company has that kind of recurring revenue? Our market cap, if you look at our value under contract, it's like 12, 13 times. Our contract value is 12 or 13 times our market cap. If you look at the pro forma gross margin on that, our gross margin is 5 times our market cap. So, you've got, we've made some traction now, or at least people are talking to us. And with the small cap funds, with the micro cap funds, with some of the investment bankers that are looking and saying, this could be another People Corp or another whatever. We'd like to think that we can be an overnight success in like 11 years. This is our 11th year, right?
Yeah.
Does that answer your question, Paul?
Yeah, no, perfectly. It's exactly what I wanted to know, is if anybody's starting to pay attention. They tend to be. Year.
I didn't think it would take 11 years. I thought it would take 5 or 6.
It's never as quick as you expect. The business plans are always, you run out of paper. They tend to take a lot longer than expected. I hear you. So Mohamad, we do have a bunch of questions. So let's jump on some of the questions here, and I'll let both of you pick sort of which one of you will answer here. But we got one. How long will it be to migrate the full $3 billion of premium from plan members onto your platform so they're generating revenue?
Well, Mohamad will answer this, but let me clarify a couple of things. $3 billion is what we have in our pipeline that we're pretty confident that will close shortly or this year, right? Some of that we're already in the process of launching, and $3 billion is about 1.2 million plan members. Okay, so if you add the 530,000 we already have, and you add that 1.2 onto that, and assuming we can win all that this year, we will be the 4th largest administrator in Canada, right? Behind the 3 large insurance companies, Canada Life, Manulife, and Sun Life. So we'll be the 4th largest. That's a huge critical mass of business that we're highly confident of. And now the transition of that, I'll turn that to Mohamad.
Yeah, probably I'll merge the 2 questions. There's another question that speaks about the white label, so I'll reflect on both questions. Fantastic question. So The way it works, there is what's so-called a one-time setup. So that's where we set up the instance. There is a bunch of project services around the configuration, right? The design, the look, the feel, all the business processes, the workflows. And this takes anywhere between 3 to 4 months. We could accelerate it sometimes, but most of the time it falls anywhere between 3 to 6 months. So after that, there's a data migration. And this is where, because now we're talking about large volumes and we're talking about groups that are coming from all sizes and everywhere, what happens, we pool those and then we migrate them over time, sometimes at the renewal, which is the most efficient, effective, and best time to migrate because it's the renewal date, and this is where we pull them. And other times because of their current delivery model. Is it delivered in-house by the client, or is it outsourced to another third party and they want to migrate it to us? So depending on that, we put the plan, we put the schedule, and I think anywhere between 36 to 48 months would be a reasonable timeline to migrate those 1 million, 1.2 million members into our platform. And this covers the various aspects of those pools, whether the renewal or in-house or from other third-party service provider. I'll link that into the white label, and that's a very interesting question, and the advantages and disadvantages. White labeling is not unique and not new. It has been in the market for so long, and many softwares are being white labeled. What's unique about our offering is the white labeling business model that we brought through a channel partner approach. So we spoke about 3 market segments. If you recall in our last meeting, an enterprise market, an emerging market, and the public market. If you look at the enterprise market, we've been doing white label for all of our large client base. And those are who's who in the market, all the references. You've seen the logos. So big, sizable, large client. And we've always white labeled it to the extent that even our call center is white labeled. When we answer, we don't answer as SEB, we answer as the client. So it's that level of white labeling that we do in our large market. Now, when you look at the emerging market, and that's 97% of the Canadian market from an employer perspective, but also from a premium perspective. So when you look at that type of side of the market, and then you talk about those 3 billion migration, the white labeling and the whole business model is converting a cost center for those clients into a profit center. It's a revenue that they would never be able to see if they're not white labeling it and bringing it in-house and signing the contract with us to support, administer, and operate the environment for them. So this is a missed revenue and a missed opportunity for those customers. And now all of a sudden, they're able to see another 30, 40 million or a portion of that going into their bottom line in the form of a revenue and margins. So I hope this answers this question.
Well, I'll just add one thing to that, Paul, is that in our large clients, our enterprise and our government clients, it's really SEB directly to the client. Okay, but in our white and that's, as Mohamad says, that's all white labeled. Everything we do is white labeled. But if you look at the emerging market, it's not cost effective for a company like us or others to sell directly to that 500 employee or that 100 employee client, right? So our white label targets the broker or the consultant,
right,
or the group that already has those small clients, right? They already have those emerging clients. And so what we do is we deploy our solutions under their brand. So if you take a large insurance broker, like in Quebec, that has like 100,000 plan members, one of our white label, right? Like we white label under their brand. So we become their technology partner. Now we end up dealing directly with that small client because, you know, we're the same way we do with our large client, you know, with our contact center and all the others. But we don't have to manage the relationship with that client.
Right.
The broker does that.
Yeah.
So, and if you look at, as Mohamad says, that's 97% of the employers in Canada and about 65% of the premium. So, but it's a market that's been the domain of the large insurers.
Right.
So our white label platform, by going directly to those brokers and consultants that have already aggregated that book of business, okay, is a very cost-effective way. And we are the only ones in this marketplace. And this model is equally applicable in the States. And some of our channel partners will be taking us to the States. But we're the only one in the marketplace that can white label and attack that emerging marketplace and become effectively and cost effectively and profitably. And for our channel partner, what was a cost center, as Mohamad says, is now a profit center. Does that help understand a little better?
I think it does. Yeah. I mean, hopefully that answers the question for the person who asked it here. It makes sense to me. Okay, another question here. We've got one that says, when can we expect a share consolidation? With convertible debentures, total fully diluted is probably around 270 to 280 million.
The convertibles, let's talk about the convertibles now. With the two convertibles, that's 100 million shares, right? You know, we don't expect a conversion there in the near future. I mean, we may even have the opportunity to buy some of that back if we want. But at the moment, you know, that's not looking to be converted. And when it is converted, it won't be looking to be sold in the marketplace either. So it won't be stock that's coming back. So it's because of the strategic nature of the investment, not a financial investment per se. With regard to the 1-for-5 consolidation that we have approved by shareholders, we've been looking at the most opportune time to do that consolidation, and you know, we've been looking at it. We just haven't found that right time yet. We think we've got. We want to make sure that we have some major announcements when we do that, and we kind of merge it with some of those things, and we're pretty close to that. But you know, I won't make promises that it's going to be done in the next week. We couldn't do it. We could do it in the next 2 days. We're ready to go there, but let's do it when we're comfortable that that we've got solid support. So with the IR we're bringing on, with potentially another large strategic partner, we think those things might be the opportune time to look at that. I'm not sure if that answers your question. It doesn't.
I think it does. Yeah, I think it does. I think that's exactly it. You guys you have the intention of doing it. You're just waiting for timing that makes the most sense. I think that makes sense. Yeah. Okay, this is a question from someone who I know is a shareholder and knows the deal very well, and he probably talks to you on a regular basis, but he wants to know, where's the so-called transformational deal?
Well, we've got, let's put it this way. We have in our pipeline several transformational deals, right? Or several large deals that makes a huge difference to our bottom line, okay? And because that $3 million of premium includes two of those transactions, right? Right now,
and the other question is, any more raises required? Do you think you need to raise any more money in the next little while?
You know, we have two big objectives in 2022. One is to deploy the business and grow the business that we've got on our pipeline. And just to give you an example, if you look at just look at the $2 billion of premium and look at our existing plan members, that will be 1.3 million plan members. That group is already spending over $300 million on the type of services that we provide. Okay, we have basically 17 million of that, right? And at our $45, because we have 370,000 plan members on our platform, we have 160,000 in transition. Okay, and we have, you know, another large block that we're working on. That's one of our transactions. Okay, so if you look at the math at $45, let's say we don't reach our $100 target, but you look at the math at our just at our $45, if we transition that whole 1.3, that's $60 million of revenue. You know, it's another 40 million about what we got. And 56% of every new revenue dollar on that kind of business is bottom line for us. So, you know, that, and if we can, and our benchmark is to reach 100, you know, and that'll take a little bit of time. But if you start look at the business we have signed or very close to signing, if we do nothing in the next 3 years, except work on that book of business, just get the $45 and then work on getting it to 100, you can do the math, right? We have exponential growth already built into the business we've won. Okay, so it's just a matter of working that business, and that's without any new wins. And we have a lot of new wins on the table as well. So that will require capital.
Yeah.
Right?
Yeah.
It won't require tons of capital, but it will require capital. You know, we're engaging IR, where we have a lot more interest from some of the technology funds that we're talking to in the last week or two. And we're garnering a fair bit more interest from some of the mid-tier investment bankers and one of the large investment bankers who seem to be looking at companies like us and saying, well, you know, your market cap, you're a micro cap, but you're not a micro cap business. You're a mature business with like major contracts, and you know, you're not a startup. You know, you're not going out and raising $48 million on a wing, prayer, and a promise. You got real business, you got real contracts, real backlog, you know, real scalability. You're proven. And so if we can get a better stock value and stuff in the marketplace, we'll look at more capital, raising more capital. We need research. We need some of those things. So we hope we get that this year. We got good reason to think we will. And if we can, we'll raise some more capital, but dilution is something that we're looking at very carefully. So we're not going to be stupid about it.
Fair enough. Perfect. Quick question. Can you expand beyond Canada? I think we've answered that in the first call we had, but how do you talk to that?
Okay. Mohamad and I both can speak to that a little bit. Let's say one of our, let's call it transformational deals, has a large US base as well as international base. And if we do well in a Canadian dimension of that, that opens the door to the US. Also, we have some other, we have some unique products that our technology fits well. And maybe I should pass that one to you, Mohamad, and that will open the door not only to Canada, but the US and South America. But do you want to touch on that one, Mohamad?
Yeah, absolutely. Yeah, our technology is applicable. Like at the core of the business models, the platform itself, it's not that difficult to adapt it into new regulatory requirements like in the US or in Europe or in the Middle East and Africa. So it's really adaptable. It's how we're going to take it to the market. And I think we are of the opinion now is that we don't want to go on our own. We want to go with a partner that has the breadth and depth and knowledge of that market in the US or in Europe or in the Middle East. And we have one partner in particular who is interested now. So that's an area that we continue to explore. We want to, and we are willing to, and our technology is capable and ready some minor, not major customizations and development requirements. Other than that, it's really a go-to-market strategy. That's all.
And one follow-up to that, Paul, I think we will have a transaction shortly that will take us into the US and South American markets over the next 5-6 months. And it'll be piggybacking a channel partner that's already in those markets where our technology helps put their technology on steroids.
That's great. Yeah, I mean, you know, a major.
And we built no financial model around that yet.
Okay.
That's recent in the last 30 days.
Okay.
And we
Wow.
were approached.
Okay.
We were approached, but once we get into it and we start looking at it, but we're being approached now by a number of companies, not only domestic but international companies, because in Canada we have an India presence. We have with the Canadian resources, you know, we're kind of offshore, near shore, right? So Canada, the currency gives us a big cost advantage for US clients as well, right? So, and we can service, given our nature, we have service clients globally, across the globe. Okay, so we're experienced in international marketplaces. So we're not and I mean, Mohamad's background is as usually international, and I've been operating in international markets for 30 years as well. So we have the expertise as well as our technology fits, and we're piggybacking channel partners.
And I got to mention, I mean, you've got such large clients to begin with. There's got to be a number of them that have operations internationally, where not necessarily that wins you the business, but it gives you, or gives them a little bit more comfort if and when they're looking for your services in the US or some other global markets. Is that not correct?
Well, we have one particular situation which is kind of unique. And keep in mind, we are an enrollment platform, an administration platform, and a claims paying platform. So there are transactions out there that are unique style of benefits. Let me put it that way. Okay. And so we have one particular transaction that we were approached to do the Canadian administration and processing for. But when they started talking to us, and it's a global name, when they started talking to us, they said, oh, well, if you can do that, you should be able to do the rest of the world. And, you know, we're aggressive people. We said, sure. So
you're learning a lot of different languages just in case. Yeah.
This one doesn't matter.
Okay.
This one is, our technology will handle it all, but it's a quite unique situation, but it really opens our eyes to some of the opportunities that are available to us. And, you know, as international clients, as you say, we got the Canadian arms of international clients. And when they start looking at some of their challenges globally, we're a very cost-effective, scalable opportunity for them.
Yeah, I'd like to pick up on this point because that's also one of the reasons why our clients like us, trust us, and because we're able to scale up and down and extend with them as much as they need us to. So we have this ability to be super responsive and fast and take on new challenges and deliver it to them in a fast and better ways. So we've gained that, if you wish, brand in the market that, yeah, you can trust SEB with this, right? They're gonna do a good job. They're gonna deliver that. And our team is kind of liking it, and we're growing it to become really part of our value add and key differentiator. We have a lot of differentiators. ISO is one of them, but that, to this point, this is becoming more of a brand recognition of our ability to take on those complex requirements and convert them into simple solutions and deliver it for our clients.
Fantastic. Okay, and a couple of other questions here. Now, I see, Mohamad, you sort of answered part of the question here, but we'll ask it again here. How do you retain senior software developers? Right now, there's a lot of poaching in the industry because people can work from home for high-paying U.S. firms. How do you do that?
I'll let Mohamad answer that, but just before I'll say Mohamad's good looks and charm.
I could see that. We knew that.
Thank you for that, John. I appreciate it. No, to your point, we're doing exactly the same. We're poaching and we're being aggressive and we're getting the best people, and we're not shying. But also we've implemented a lot of programs. We'd like to call them engagement, but there's an incentive-based engagement as well. So there is pay for performance, there is SEB, there's other retention schemes that we've put in place, and there are other challenges that we keep our software developers not only engaged but enjoying what they're doing. And I see a quick response here from our digital insurance products, and those are insurance products that you can buy 100% online without a broker intervening in the sale process. So voluntary products like a critical illness, like a pet insurance, like even some other, if you wish, voluntary life within a certain threshold without any medical questionnaire, whatever. So those are the products that we think the white label for the emerging market through those brokerage firms or MGAs or large consulting firms will benefit from and will make them new money.
Take 1 second. This is just offline, and just speak to the digital marketplace that we're launching shortly.
Right. So again, aligned with this platform for the emerging market, what we've done on our part, we've negotiated at least now 8 digital products. And the way I want to put it, because we have now the volume and we have the traffic and we have the footprint, we're able to negotiate rates that a single employer with 500 lives will not be able to get those rates, right? So we've identified 8 products that we thought are innovative, creative, and there is a potential demand for. We've digitized them on a marketplace. We've built the whole framework around it, from the regulation, the calculators, the policy management, everything. And we've API'd it into our enrollment and benefits administration platform. So now it's going to be intertwined into our operational or enrollment or administration platform. So we will have 8 products available, hopefully before the end of Q2, live and ready on our marketplace. And this will be made available also to the emerging market to take advantage from and offer it to their members. And there will be a revenue share with the brokers and the brokerage firms. So we're making it super, super lucrative for those even individual brokers to take advantage, use, utilize, and generate new money.
Well, that's very interesting.
Yeah, this platform is it's unique, and we don't know of any other platform that's quite like it.
Interesting, very interesting. Okay, so one last question. You mentioned earlier, Mohamad, the idea of cost center turning into profit center. Give us an example. Give us a real world example of how you're able to do that.
Yeah, so very simple, very simple. Today, as a broker, you take commission on the premium of the group. You do some administrative functions for your group, for the customer as a broker, and you don't necessarily make any revenue or any value out of it. Retaining your customer, of course, you retain, and you need to make sure they get the best service. So what happens usually, you might have multiple underwriters offering various products, insurance products, as part of that group benefit. So as a broker, I will have to manage all of those underwriters and make sure the member is getting that exemplary experience and good support from those providers. And I'm taking my 7%, whatever, average commission on the premium. So the admin is currently either sitting with the underwriter or sitting with the plan sponsor themselves. They're doing their day-to-day administration, the enrollment of benefits, supporting their members, making sure, right, all of that activity. What we're offering them now, we're offering them an opportunity to have their own administration capability, of course, outsourced to us, but white labeled under their brand, everything. Now they have more visibility over the experience with their customers and the members, and they don't have to go into those underwriters or whoever providers to make sure the member is getting the experience. Two, now they're able to build into the rate and the premium the administration fee and ask the provider to offer them net of any administration. So there is an opportunity not only to generate this new revenue, but also to increase their relevance to the customer, right? Making sure they have control over the experience that their customers are having as it relates to administration. On top of that, there is another profit opportunity, and that's the digital products. So now every time they need to sell, they need to go get the quote, generate a whole 10 pages, 20 pages of a quotation and do market comparison and all of that stuff. Today with those digital products, it's much easier, much simpler, and most of those are paid by the member. Some of them could be co-paid, part of it by the employer, part of it by the employee, but that's a whole new revenue for them. They don't need to sweat and spend too much time and effort trying to pitch and sell those. It's all automated. The marketing campaigns are automated, and they will be able to generate net new commissions and revenues out of those products.
Fantastic. Thank you for that. Listen, from the investor standpoint, we're looking forward. Why don't we try to summarize sort of the catalysts or inflection events that you think we can look forward to in 2022?
Well, from where it's at, we have the critical mass today. Okay, with our client base, with the deals we signed, the ones we will sign, we've got a massive critical mass of business. And in that business, those clients are already spending money. So we're not looking for new money. We're looking to capture money they're already spending, and our solutions are more cost effective, more high value added. You know, they in some cases, they like the white label, they create revenue models around former cost centers. So we've got that mass. We've got the credibility, okay, with our clients. So, you know, in 2022, I think we're going into 2022 with 6 quarters of positive EBITDA and sustainable growing EBITDA going forth. We're going into with a stronger balance sheet. We're going into with huge contract wins and a huge pipeline of wins that we're expecting this year that we're highly confident of. Very scalable infrastructure. No CapEx really anymore. Like our clients are really paying for our CapEx, and it's a few $100,000 to maintain what we've got. We've got visibility through our sophisticated clients on the leading thinking in the industry. So you get clients that spend hundreds of thousands and millions on consultants, but we're the ones that have to administer that. So we get to see without cost some of the leading thinking going on in the industry. You know, we've got 35 different certificate like platforms that we're competent in, you know, from artificial intelligence to cloud to, you know, all the systems integration expertise that we have. So we are the only organization that can actually go in to a large broker consultant and not only deploy our software, our benefit processing software and solutions, but we can take their existing IT environments and enhance them, upgrade them, tie them in, reduce their costs. And we can do that if they want to do it on a SaaS basis, a software as a solution basis, or a co-host, or a co-source, or fully outsourced. We can do whatever they want in any environment, in any language. So, I mean, if you start looking at, and these are proven solutions. There is no speculation on what we can do and can't do. They're proven. And our existing clients and pipeline that we expect to sign shortly has over $300 million they're spending on our type of services.
Mhm.
So if we do nothing else but just beat away at that 300 million and take it from other people that don't have as good as solutions, or the same economic or the same value proposition or the same economics that we can offer the client, and if we add 50 million of revenue at a 70% gross margin, that's 35 million, and 80% of that goes to the bottom line. So, you can start doing the math. We don't need, we don't need to win all of that $300 million that they're spending.
Yeah.
And
Yeah.
we are going to win a lot of it over the next 24 to 36 months. So we think we're at that inflection point that where we can be an overnight success in 11 or 12 years.
The way it works. That's the way it works, and it's all
Well,
about
I
the
mean,
math.
a lot of companies, Paul, that have been like that. They
all are. They all are. I don't know any. Yeah. Yeah, I don't know any that have literally been overnight successes. It's always taken a little longer.
And then one day they wake up and they say, "Gosh, where did they come from?"
Exactly.
Right.
What happened? Listen, we've covered a lot. Is there absolutely anything else? Any sort of parting message that you want investors to walk away with today?
Well, we're very passionate about our business, and
That you are,
as you know, and we've got a very good team, and so we just hope investors like us as much as we like ourselves.
I love it. If somebody wants more information, what's your website address, or what's the best way they can get more information on the company?
If you go in any of our news releases, all the contact points are there. My contact is there. Mohamad's is there. You can reach out to us. Go on our website, you'll find contact points. And as I say, hopefully in the next week or two, we'll have a professional IR that works with us as well, which will give us more bandwidth to deal with investors.
Fantastic, fantastic. Listen, it's always fun to talk to you guys, John and Mohamad. Thank you so much for joining us today and updating us. We've been speaking with CEO John McKimm and COO Mohamad Chayah from Smart Employee Benefits, SEB, on the Venture Exchange. Thank you so much for joining us today, and we look forward to catching up with you guys in the near future.
And thank you, everyone, for the time and that you spent listening to us. And thank you, Paul.
Thank you.